ExamPrep.School. Alaska Managing General Insurance Agent exam code InsAK-MGA90 or OPMGA90. There are 6 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Laws, rules, and regulations. Laws, rules, and regulations. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Under AS 21.27, up to 300, the Director of Insurance is authorized to adopt regulations to A. Override federal risk-based capital standards for insurers. B. Mandate minimum windstorm deductibles for all coastal policies. C. Change statutory deadlines for renewal of producer licenses. D. Prescribe requirements for the accreditation of rating organizations. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is D. The correct answer is to prescribe requirements for the accreditation of rating organizations, because AS 21.27 TT100 grants the Director rulemaking authority to implement provisions of the Insurance Code, including accreditation standards for organizations that develop rates. Reason A is not correct. This option is incorrect because federal risk-based capital standards are set at the national level and cannot be overridden by state regulation. Reason B is not correct. This option is incorrect because the Director cannot mandate specific policy deductible amounts beyond what the statute or approved rate filings require. Reason C is not correct. This option is incorrect because changing statutory deadlines exceeds rulemaking authority and would require legislative action. Question 2. Under AS 21.27. Hey Andy, when issuing a proposed order to suspend a producer's license, what procedural step must the Director of Insurance take? A. Provide written notice with a 30-day period to request a hearing. B. Publish the order in the Alaska Administrative Register without notice. C. Issue the order immediately without prior notice or hearing. D. Provide written notice with a 15-day period to request a hearing. The correct answer is D. The correct answer is to provide written notice with a 15-day period to request a hearing because AS 21.27 requires the Director to notify the licensee and allow a hearing within 15 days before suspending a license. Reason A is not correct. This option is incorrect because the statute specifies a 15-day period, not 30 days, for requesting a hearing. Reason B is not correct. This option is incorrect because publication alone does not satisfy the notice and hearing requirements under the statute. Reason C is not correct. This option is incorrect because the Director must provide notice and an opportunity for hearing before suspension. Question 3. During a routine market conduct examination, the Director's examiner requests copies of a producer's policy premium ledgers. After 30 days, the producer still has not provided the documents. Under Alaska's standards for market conduct examinations of licensees, what is the next step the Director must take? A. Impose an administrative fine for non-compliance. B. Offer an informal conference to negotiate compliance. C. Suspend the producer's license until records are produced. D. Petition the appropriate court to compel document production. The correct answer is D. The correct answer is to petition the court, since Alaska law grants the Director authority to seek judicial orders when licensees fail to comply with examination requests. Administrative fines or informal conferences are available remedies but are secondary to securing a court order to obtain required records. Reason A is not correct. Administrative fines may address non-compliance but are not the primary mechanism for compelling record production under state examination standards. Reason B is not correct. Informal conferences may foster cooperation but do not satisfy the director's statutory authority to legally compel records. Reason C is not correct. License suspension is a punitive measure, whereas the law requires a court petition to obtain necessary documents before such actions. Question 4. A company's risk-based capital ratio falls to 145% of its authorized control level and remains below that threshold for more than 15 days. According to Alaska regulations on initiating financial examinations of insurers, what action must the director take? A. Initiate a financial examination of the insurer. B. Impose a regulatory penalty equal to a percentage of surplus. C. Require the insurer to submit a corrective action plan within 30 days. D. Place the insurer under provisional rehabilitation status. The correct answer is A. The correct answer is initiating a financial examination because the law mandates an exam when an insurer's risk-based capital remains below 150% of the authorized control level for the prescribed period. Other measures like penalties or corrective plans are supervisory tools but do not replace the statutory exam requirement. Reason B is not correct. Regulatory penalties can enforce compliance, but do not satisfy the statutory requirement to initiate a financial examination in these circumstances. Reason C is not correct. Submitting a corrective action plan is a remedial step but does not fulfill the immediate statutory obligation to conduct an examination. Reason D is not correct. Provisional rehabilitation status is not triggered solely by low RBC ratios and duration. The primary requirement is to schedule a financial exam. Question 5. A producer is alleged to have violated unfair trade practices. The director mails a notice of hearing on disciplinary action on August 1st. Under Alaska's notice and hearing procedures at the earliest, on what date can the hearing be scheduled? A. August 16th. B. August 20th. C. August 22nd. D. August 31st. The correct answer is C. The correct answer is August 22nd, because Alaska law requires at least 20 days' notice after mailing before a hearing. Earlier dates fail to meet the statutory minimum, and later dates exceed the earliest permissible scheduling. Reason A is not correct. Scheduling on August 16th does not provide the required 20 days of notice. Reason B is not correct. August 20th is only 19 days after mailing and thus fails to meet the statutory minimum. Reason D is not correct. August 31st exceeds the minimum requirement but is not the earliest permissible date. Question 6. After a managing general agent inadvertently submitted an inaccurate financial report to the Alaska Division of Insurance, and the director determined there was no material harm to consumers, the director must still consider civil penalties under Alaska insurance law. The director considers factors such as severity, compliance history, and deterrence, but remains constrained by the statutory penalty limits. What is the statutory minimum and maximum civil penalty the director may assess per violation? A. $100 to $1,000. B. $500 to $5,000. C. $500 to $10,000. D. $1,000 to $5,000. The correct answer is B. The correct answer is that the director may assess a civil penalty of not less than $500 and not more than $5,000 for each violation under Alaska insurance law, regardless of the violation's nature. Reason A is not correct. This range understates both the statutory minimum and maximum amounts. Reason C is not correct. This range overstates the maximum civil penalty allowed by statute. Reason D is not correct. This range understates the minimum allowable amount under the statutory penalty range. Question 7. Under Alaska law, which of the following best describes an admitted insurer? A. An insurer that holds a valid certificate of authority from the director to transact insurance within Alaska. B. An insurer organized outside the United States that is admitted through a reciprocal licensing agreement. C. An insurer authorized only to write surplus lines business in this state. D. An insurer that is neither licensed nor authorized, but appears on the state's unauthorized insurer list. The correct answer is A. The correct answer is an insurer holding a certificate of authority issued by the Director of Insurance, which authorizes it to transact insurance in Alaska in compliance with state laws. Reason B is not correct. Describes an insurer organized outside the U.S. under a reciprocal agreement, which does not constitute admission via a certificate of authority from the Alaska Director. Reason C is not correct. Refers to surplus lines authorization, but admitted insurers may write more than just surplus lines business. Reason D is not correct. Describes a non-admitted insurer which lacks licensing or authority and is listed as unauthorized, not admitted. Question 8. In Alaska's surplus lines context, what is the primary characteristic of a non-admitted insurer? A. An insurer lacking a certificate of authority in Alaska but eligible to accept surplus lines business. B. An insurer chartered in Alaska but writing only inland marine policies. C. An insurer holding a certificate of authority limited to surplus lines. D. An insurer licensed in Alaska under a reciprocal licensing agreement. The correct answer is A. The correct answer is an insurer that does not hold a certificate of authority in Alaska, but may be used for surplus lines placements because it is non-admitted under state licensing requirements. Reason B is not correct. Describes a domestically chartered insurer with a specific line of business, not a non-admitted insurer. Reason C is not correct. Refers to a certificate of authority restricted to surplus lines, which implies admission rather than non-admission. Reason D is not correct. Refers to reciprocal licensing within Alaska, which indicates admission, not non-admission. Question 9. A property insurer incorporated in Nevada obtains a certificate of authority to write property coverage in Alaska. Under Alaska insurance regulations, how should this insurer be classified? A. Domestic insurer. B. Foreign insurer. C. Alien insurer. D. Unauthorized insurer. The correct answer is B. The correct classification depends on state of incorporation. Because the insurer is chartered in another U.S. state, it is a foreign insurer in Alaska. Reason A is not correct. Domestic insurers are those incorporated in Alaska, but this company is incorporated elsewhere. Reason C is not correct. Alien insurers are chartered in a jurisdiction outside the United States, not in another U.S. state. Reason D is not correct. An unauthorized insurer would lack a certificate of authority, but this insurer holds one. Question 10. An Illinois-based insurance company issues dividends to its policyholders from company surplus at the end of each year, reflecting their ownership in the insurer. Under Alaska law, what type of insurer best describes this company structure? A. Stock company. B. Mutual company. C. Reciprocal insurer. D. Lloyd's Association. The correct answer is B. This structure is a mutual company because policyholders serve as owners and receive surplus-based dividends. Reason A is not correct. A stock company distributes profits to shareholders, not to policyholders as owners. Reason C is not correct. A reciprocal insurer is unincorporated and managed by an attorney-in-fact, not owned by policyholders directly. Reason D is not correct. A Lloyd's Association is a marketplace of syndicates rather than a policyholder-owned insurer. Question 11. A homeowner pays an annual premium of $1,200 at policy inception. After 6 months, the policy is canceled and the insurer applies a pro rata refund method. How much unearned premium must the insurer return under Alaska regulations? A. $800. B. $400. C. $600. D. $1,000. The correct answer is C. Under a pro rata refund, the insurer must return the portion of the premium covering the unexpired term, which is half of $1,200 or $600. Reason A is not correct. The $800 refund would reflect only 4 months earned, which contradicts the 6-month elapsed term. Reason B is not correct. The $400 figure represents the earned portion, not the unearned premium liability. Reason D is not correct. A $1,000 return assumes 2 months of earned coverage, not the actual 6 months. Question 12. A licensed property insurance agent based in Washington State who holds no Alaska license uses phone and email to quote, negotiate, and bind a homeowner's policy for a property in Juneau owned by an Alaska resident. After issuing the binder electronically, the agent mails the final policy documents from the Washington office. Under AS 21.09, Tehna's definitions of transacting insurance, which statement best describes whether the agent transacted insurance in Alaska? A. The agent did not transact insurance because all activity was conducted electronically and the policy was mailed. B. The agent's mailing of the policy is the only act considered transacting insurance in Alaska. C. The agent transacted insurance because soliciting and negotiating homeowners coverage for an Alaska resident constitutes transacting insurance even when done remotely. D. The agent did not transact insurance until the premium was collected in Alaska. The correct answer is C. The correct answer is that solicitation and negotiation of insurance on Alaska risks, even when conducted remotely, constitutes transacting insurance under AS 21.09-010. Binding coverage for an Alaska resident also counts as transacting insurance within the state, regardless of where the documents originated. Reason A is not correct. Remote electronic communications are considered transacting insurance under AS 21.09. So, conducting all activities electronically does not exempt the agent from transacting insurance requirements. Reason B is not correct. Mailing the final policy is not the only act constituting transacting insurance. Solicitation, negotiation, and binding also qualify. Reason D is not correct. Collection of premium is not required to trigger transacting insurance. Negotiating and binding coverage already meet the definition. Question 13. Under Alaska insurance law, which of the following must an applicant complete before submitting an application for a resident producer license? A. Complete a state-approved 40-hour pre-licensing course. B. Submit fingerprints for a state and federal criminal history background check. C. Obtain a sponsorship from an Alaska licensed insurer. D. Secure an active surety bond in the amount prescribed by statute. The correct answer is B. The correct answer is submitting fingerprints for a state and federal criminal history background check, as Alaska requires a background check at the time of application for a resident producer license under AS 21.27.20. Reason A is not correct. Pre-licensing education is not required to apply for a resident producer license in Alaska. Reason C is not correct. An insurer sponsorship is not a prerequisite for applying for a resident producer license. Reason D is not correct. Alaska law does not require a surety bond to apply for a resident producer license. Question 14. Under Alaska's producer licensing reciprocity provisions, a non-resident applicant must have held a producer license in the home state for at least how long to qualify for a non-resident license without examination? A. 6 months. B. 1 year. C. 18 months. D. 2 years. The correct answer is B. Alaska grants non-resident producer licenses without examination under reciprocity if the applicant has been licensed and in good standing in the home state for at least 1 year, as set forth in AS 21.27/20. Reason A is not correct. A 6-month licensed period does not meet Alaska's 1-year reciprocity requirement. Reason C is not correct. An 18-month duration exceeds the minimum requirement and is not specified. Reason D is not correct. A 2-year requirement is more than Alaska's 1-year reciprocity threshold. Question 15. Which statement about temporary producer licenses in Alaska is correct under state law? A. A temporary license may be valid for up to 180 days. B. It grants authority to bind coverage permanently after expiration. C. It is available to the designee of a deceased licensed producer. D. It requires completion of standard pre-licensing education hours. The correct answer is C. Under Alaska law, a temporary producer license may be issued to the designee of a deceased licensed producer, and it is valid for a limited period as specified in AS 21.27/20. Reason A is not correct. Alaska temporary licenses are limited to 90 days, not 180 days. Reason B is not correct. Authority to bind coverage does not extend beyond the license's expiration. Reason D is not correct. No pre-licensing education hours are required for a temporary producer license. Question 16. A newly formed partnership, Northern Trail Insurance Group, submits its firm license application for property and casualty lines to the Alaska Division of Insurance, but the application is returned as incomplete. In reviewing the submission, which of the following requirements was most likely omitted? A. Identification of the firm's designated compliance officer. B. A list of all licensed producers affiliated with the firm. C. A copy of the partnership agreement and proof of formal entity formation. D. Documentation of the firm's financial net worth. The correct answer is A. Under Alaska regulations, firms must designate a compliance officer on their initial license application to ensure oversight of all insurance activities. Without this designation, the application is considered incomplete. Reason B is not correct. Listing affiliated producers beyond the designated compliance officer is not a specified requirement for the initial firm license application. Reason C is not correct. Formation documents are required for entity verification but do not satisfy the compliance oversight information needed on the license application. Reason D is not correct. Financial net worth documentation is not a prerequisite for a standard property and casualty firm license in Alaska. Question 17. When a corporate firm licensed to sell life and health insurance designates an individual as its compliance officer, which of the following duties does that individual assume under Alaska regulations? A. Maintaining a log of consumer complaints and verifying their resolution. B. Ensuring timely renewal of the firm's errors and omissions insurance. C. Conducting quarterly audits of premium trust account balances. D. Preparing the firm's annual financial statements for filing. The correct answer is A. Alaska regulations require a firm's designated compliance officer to supervise adherence to insurance laws, which includes maintaining detailed records of consumer complaints and tracking their resolution. Reason B is not correct. Errors and omissions insurance renewal oversight is a corporate risk management activity, not a statutory compliance officer responsibility. Reason C is not correct. Trust account audits are generally required for insurers, not for a firm's compliance officer in life and health lines. Reason D is not correct. Preparing annual financial statements is an accounting function, not specified as a compliance officer duty under Alaska law. Question 18. Global Advisors, LLC includes individual producer Jane Smith on its firm license application, but fails to submit her fingerprint cards. According to Alaska licensing rules, what action must global advisors take to satisfy background check requirements? A. Submit Jane Smith's signed waiver for a background investigation in lieu of fingerprint cards. B. Include a notarized statement affirming Jane Smith has no disqualifying criminal history. C. Notify Jane Smith to obtain state and federal fingerprint cards through an approved vendor and submit them within 30 days of application filing. D. Pay an additional fingerprint processing fee and await division approval without additional documentation. The correct answer is C. Alaska regulations require firm license applicants to submit state and federal fingerprint cards through a division-approved vendor within 30 days of filing. A notarized statement or waiver cannot replace fingerprint submissions. Reason A is not correct. Signed waivers are not accepted in place of fingerprint cards for background checks. Reason B is not correct. A notarized statement of no criminal history does not fulfill fingerprint submission requirements under Alaska law. Reason D is not correct. Paying an additional fee does not waive the requirement to submit fingerprint cards. Question 19. An Alaska insurer executes a contract appointing a new resident producer to sell property insurance. Under state law, by when must the insurer file the certificate of appointment with the Division of Insurance to ensure proper authorization for the producer? A. Within 30 days after the contract effective date. B. Within 15 days after the contract effective date. C. Prior to the first insurance application submission. D. No later than the insurer's next fiscal quarter end. The correct answer is A. Alaska law requires insurers to file a certificate of appointment within 30 days of the agent's contract effective date to authorize the producer lawfully to transact insurance business. Reason B is not correct. A 15-day deadline is not specified. The statute establishes a 30-day filing period. Reason C is not correct. Filing must occur within 30 days. It is not tied to the first application submission date. Reason D is not correct. Filing by fiscal quarter end does not meet the 30-day legal requirement. Question 20. After terminating the appointment of a non-resident producer, Stellar Insurance Company completes the necessary termination filing with the division. What notice related to appointment termination must the insurer provide to the producer under Alaska regulations? A. A published notice in a local newspaper within 60 days of termination. B. A written notice to the producer within 30 days of termination. C. An oral notice during the next scheduled meeting with the producer. D. A state-issued formal notice mailed to the producer's last known address within 90 days. The correct answer is B. Under Alaska regulations, insurers must provide the terminated producer with written notice of appointment termination within 30 days to inform them officially of the action. Reason A is not correct. There is no requirement for newspaper publication for appointment termination notices. Reason C is not correct. Oral notice is insufficient. The regulation mandates written notice. Reason D is not correct. The insurer itself must send written notice within 30 days. A state-issued notice is not part of the procedure. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.